Come on, you're why are you smiling? Why are you laughing?
I got distracted here, that's why.
All right.
Hi guys, you're live.
All right. Thank you very much. Okay, welcome everyone. Welcome to another edition of Binance Walkthrough, Binance Newbie Walkthrough. This is our second class in this series, and we hope today we're able to share more knowledge on what we promised in our last class. Today we'll be looking at sports and margin. Today with me, my co-host V. V, could you please just say some kind of welcome words to our viewers?
Yeah, welcome everyone. Great to have you all to this week's session of the West African Newbie Walkthrough. We hope you had a great time last week going through the onboarding process and how to get your first crypto. So now that you have your first crypto, just as Carl said, we're going to go into spot trading and margin trading, what to do, how to go about it. So yeah, stick and stay, but a word of caution, this is not financial advice. Kindly treat
Exactly.
everything as for educational content and information only. And always bear in mind
Exactly.
that trading is risky. Cryptocurrencies are volatile assets, so trading them is generally risky. So you should just ensure that you can, trade with what you can afford to lose. We cannot overemphasize that. So with that out of the way, this is V, and let's get ready for a nice and interesting session.
Thank you very much for those words. And those are very, very important ones for everybody to take note of, especially the newbies. Everybody wants to make profit and jump into trading right away. But you have to be very, very careful and do your own research. Also, just like Avi said, this is not financial advice. Everything we get here is for educational purpose. My name is Kazim Seyudu, and we're going to get this started right away. As right, we are taking a look at spot trading and margin trading today. We're not going to be going into too much details, but you're going to get more and more value from this session today. I'll be taking you on spot while we will take your margin. So straight up, let's go into the business of the day. Which is spot trading on Binance. Binance, as you know, is one of the biggest crypto exchange in the world, if not the biggest. So everything we'll be doing is relating to Binance, of how you navigate the Binance ecosystem. And today we're looking at spot trading. All right. Before we move forward, there are certain things we need to know about spot trading and trading in general. On Binance, there is a page where you can try to check the trading rules limits on every crypto asset that are available on spot market, and that you can access as I've put here. You can access at binance.com/an/trade rule. So there you would see different trading pairs, their limit, their minimum order amount, their maximum order amount, and so on and so forth. So you can get more details on that particular page. Now, the most important aspect which I want to look into today are the order types. The order types on sports market. We have five different order types. Majorly, in a broader view, they're actually categorized into two, which are the market orders and the limit orders. But looking into them into details now, we have five main types on spot market: the market orders, limit orders, spot stop limit, OCO, and trading stop. So I'll be going into them one after the other. The first one, which is the market order. What's a market order? A market order is executed at the current market price as quickly as possible. So when a user places the order, it happens very fast because it's market order. It happens almost immediately. So when placing a market order, all you have to do is select your amount, or you use the total spend, the total asset you want to spend in buying a particular asset when you're buying or selling using market order. We're going to go into more details and look at how market order is actually how it works. We're going to look into that in a jiffy. All right. So what's limit order? Limit order is an order you place on the order book with a specific limit price. So you decide, unlike market order, where you don't get to decide the price at which you want to buy an asset. In limit order, you are able to set your own price at which you want to buy or sell an asset. So it will only be executed if the current market price reaches your limit price, or even better. So you may use limit orders to buy an asset at a lower price or sell an asset at a higher price. So it's something you determine yourself as the buyer or seller. You determine the price at which you want to sell or buy an asset. Now let's look at what stop limit order is. A stop limit order is a limit order that has a limit price and a stop price. So there are two things involved there. Stop limit order has stop price and a limit price. So that makes the stop limit order. So when the stop price, which you set as well, is reached, the limit order will be placed on the order book. So it is until the market price gets to your stop price, that's when your order is placed on the order book. So when the stop, once the limit order, now once the limit price is reached now on the order book, the stop price already, which has already triggered your limit order, when it reaches the stop price, it triggers your limit order to place on the order book. Then your when the price now reaches your limit order, your order gets executed immediately. So not until the market price reaches the stop price before your order is placed. So immediately it's placed, and the market price also gets to your limit order price, then it gets executed immediately. So in essence, limit price is the selected or potentially better price at which the stop limit order is executed. And to the fourth one, which is the OCO. OCO stands for one cancels the order. So when you see OCO order, so it's one cancels the order type. What happens there? So what OCO does is it combines two market orders where if one is fully or partially filled, the other one is cancelled. We're going to see an example of that very soon. So an OCO order on Binance now, it consists of a stop limit order and a limit order. So there are two order types in OCO, the stop limit order and the limit order. So both orders now must be either buy or sell orders. So you cannot set a buy and sell order in OCO. It has to be both of them have to be either buy or sell orders. So if you cancel one of the orders, the total OCO order will be cancelled. So if you cancel one of the orders, because you're going to have two orders set on the on your order history, so on your order page. So when one is cancelled, the total OCO order is cancelled. Now to the last one, which is the trailing stop. So this is mostly used by people who want to manage their risk, lock in their profits. They don't want to lose profits while still have their order open. So a trailing stop order, what it does is it allows traders to place a preset order at a specified percentage away from the market price. So when the market swings, it helps them to limit their loss and protect their gains. So when a trade does not move in a direction that trader considered favorable, the order is closed and the profit taken out of the market. So it locks in profit by enabling a trade to remain open. So your trade remains open while your profit is being protected, and also prevents you from being exposed to too much risk. So when the price moves in the opposite direction of the direction which you consider favorable, the trade is closed and your profits are taken out. Now, let me now show you what a market order page, our market order trading area looks like. So this is what you see on the market when you're using market order. What usually happens there is that you must ensure that you select market, which is marked in red here. You select market, so you are presented with a single input box. And the price there, the price now you can see it's written market. So you are using market order, which means you don't have the liberty, you don't have you don't have the power now to enter the price at which you want to buy that asset. So the only thing you can determine is to enter either the total USDT, or let's say we are assuming you're buying BTC now with USDT. So it's either you enter the total USDT you want to spend, or you tap on the drop down arrow just by the side of the total here to select amount, or by entering the amount of BTC you want to buy from the market. Then you can now use the quantity bar here below the total input box to select the total amount in USDT you want to spend to purchase that asset. Then tap on buy or sell. The same approach is used for the sell order. So we have two types. Just like you can see now, you have the total or amount when you're using market order. By using total, just like I've explained. So let's suppose you have 1,000 USDT and you want to place a market order to buy BTC, BTC using the BTC USDT trading pair. So when you place a buy 100% order, the system will execute your order at the current market price according to the amount of USDT you have. Now, the final BTC amount that you get is determined by the market price and quantity when the order is placed. So you can check the amount of BTC purchased in your own order history. There is a con to that which I will explain very soon. So if the second type is by using the amount, just like I said, by entering the amount of the assets you want to buy. So for example, now you own, let's say 100,000 USDT, and the price of BTC at that moment is fluctuating around, let's say 34,000 USDT. When you place a buy order to buy with the 100% of your funds, So the system will match your order with the best available sell orders now, available sell order on the market to determine how many BTC you can buy. So the system calculates that you can buy, assuming 2.9 BTC with 100,000 USDT, and you click the click the buy order button. So what happens now is that if the BTC price increases at that moment, it means that your 100 USDT can no longer buy the specified amount of BTC. So you will have to manually enter the amount of BTC you can buy, then click on buy order again. So the con that I said it's in the for market order now is that, let us assume you want to buy 100 BTC. You want to buy 100 BTC, but the best ask order on the market as, let's say, just 50 BTC, and at the price of, let's say, 30,000 USDT. You wish to buy it at that market price, but the amount of BTC you want to buy is more than the available order. So it will fill your order until all your BTC is filled. Until all your order is filled, that is when it is. So that means you are going to probably get lesser BTC, because after it fills it at that 30,000 USDT, it will move up to the next available order until your total BTC is filled. So those are the kind of things you have to watch out for when you're using market order. That is why sometimes some people will be like, okay, I place a market order that I want to buy an asset which is $1 at and with 100 USDT. So you are thinking you'll get 100 of that asset, but fortunately the price increased, or the order available, the total volume of order available at $1 is just about 50 of that asset. So it's going to fill in that 50, then go to the next available one at, let's say, 1.1 USDT to purchase the remaining order. So which means your order is at an average of 1 point something USDT, and you're not going to get 100 of that asset. I hope that is very clear. So let's move into limit order. So I have an illustration here that illustrates both buy order and sell order for the limit order type. If you look at the buy order, when the current market price of an asset is at point A, as labeled on the chart, drops to the order limit price. The limit price now is at point C or below it. The order will be executed automatically. That's just a simple way which limit order works. So therefore, if the buy price is above or equal to the current price, so therefore the buy price of of a limit order must be lower than the current price. Your set limit price to buy an asset must be lower than the current market price. If an asset is at $1 and you want to use limit order to buy the asset, your limit price that you're setting should be below, let's say, below $1. It could be around 0.99. It must be below the market price. So let's say, for instance, if you place a buy limit order with a limit price of 3,000 at point B on the chart, which is above the current price, the order will be filled immediately, and the executed price will be around 2,004, but not 3,000 as you think you would be buying it. So the best way to use the limit order type is to set below the current market price. Same approach if you're selling, you want to create a sell order. So when the current price now, which is at point A, reaches the order's limit price at point B or above it, the order will be executed automatically. If the sell price is below or equal to the current price, therefore the sell price of limit orders must be set above the current price. So if you're selling an asset, the best way for you to use the same limit order type is to set your sell price above the current market price. Let's take, for instance, now that the current price of an asset is 2,400, which is at point A, and you place a sell limit order with a limit price of 3,000 at point B. The order will not be executed immediately until the price reaches that 3,000 point or above it. So if you place a sell limit order with a limit price of 1,005 at point C, which is below the current price, the order will be filled immediately at around 2,004, but not 1,005 as you think. So the best way to use a sell, or if you're selling using the limit order type, you have to set your limit price above the current market price. So let's look at regarding to Binance interface when you're using the spot market in Binance. So how do you actually sell or buy using the limit order using Binance.com? To do that, all you have to do is just go to trade, which can be accessed through the navigation bar or through the market section on the Binance.com homepage. Click trade, go to spot, and select the trading pair you want to trade with. Let's say BTC USDT or BNB USD, any trading pair whatsoever. Select the trading pair, go to the spot box now and click on buy, or if you're selling, you tap on sell, and make sure that limit order type is selected. The limit order type is selected, so you are on limit, so you're using limit order type. So the next thing for you to do is to enter the price at which you want to buy the asset. You enter the amount of crypto to buy, or use the percentage bar, which is always below the amount input box. So just toggle it. You can drag it to the end, which means 100%. If you drag it to the middle, the perfect middle, that's 50%. So you can use it to also tell the system the amount you want to spend. So immediately you do that, you fill in the details. All you have to do next is just to click on buy, and then you're buying BTC, buy BNB. Just click on buy. The same approach if you're selling as well. If you're selling as well, you enter the price at which your limit price at which you want to sell that asset. Enter the amount you want to sell, and just tap on sell, and that's it. That's it for limit order time. So let's move on to OCO. OCO is the last is the next order type that I will be looking at, which is one cancels the order. So this OCO order might be a bit complex for newbies, but it's actually very easy. It just creates an avenue for you to set two type of orders at the same time. So suppose BNB is trading now between 510 BUSD and its resistance is around 540 BUSD. So the resistance is around 540 BUSD. Now you would like to buy BNB if the price drops to 500 BUSD, or if it breaks that resistance above. So you have these two ideas in your mind that, okay, if BNB breaks that resistance, it definitely will continue upwards. Or if it drops below the point at which it is now to, let's say, 500 BUSD, you want to take a position to ride it back again to the resistance level. So you can create an OCO order with a limit order now at 500 BUSD, and a stop limit order with a stop trigger at 540 BUSD. So you have both stop limit order and limit order type in OCO order. An illustration of how OCO actually works. If you're buying or selling, so if you're buying, like it's shown in the chart on the left. So what you do is you set the stop price at point B above the current price, and the limit price below the current price. For example, now the stop limit will be triggered when the price goes up to point B, which is around 3,000, and the limit order will be cancelled simultaneously. So the moment either if the limit order or the stop limit order is executed, the other one is cancelled. So if you're selling, same way, you set your stop price below the current price and the limit price above the current price. So for example, the stop limit order will be triggered when the price drops to point C, which is around 1,005, and the limit order will be cancelled simultaneously. So however, now if the price goes up to 3,000 or above, the limit order will be executed automatically as set by you. Now let's look at how you place an OCO order on Binance. Just in 5 simple steps. You go to trade, accept spot, select your trading pair. Be very sure you select OCO. OCO might not automatically appear in the other types as displayed above. You have to probably tap on the drop down, the little arrow here to drop down, then select OCO. So you are presented with these boxes where you enter the details of the order. So you enter the price, the stop price, the limit price, and the amount of that asset you want to buy. Then tap on buy. So it's as simple as that. Now, what I want to do now is just give us a demo on these order types. I'm going to do a demo on the limit, stop limit, and OCO. So I believe you're following me. V, I believe I'm audible enough and I'm being followed.
Yes, you are audible and we are following.
Thank you very much. All right, so let me just quickly navigate to Binance.com so we can do some trading demo. Okay, so I believe my screen is visible. Okay, so now we go to spot. From trade, access the trade trade at the top navigation bar. Go to spot. So you are presented with the spot area, spot trading page. Now we have the limit order here, market order, stop limit. OCO, like I mentioned, is not readily displayed. So what you do is tap on this small arrow, then select OCO if you're using the OCO order type. So for the first one, I want to demonstrate the limit order type. So just like as explained, the limit order type is it works in a way that you set the limit price at which you want to buy an asset. So when the market price reaches that limit price, that is when your order gets executed. So now let's look at this. Bitcoin now is trading around 22,900 USDT. I want to buy Bitcoin when it drops below that price at, let's say, 21,000 USDT. And I want to buy, probably I don't know the amount of BTC I want to buy, but I know the total amount I want to spend. I have 24 USDT as a balance here. So let's say I want to spend just $12 from that amount. I can just enter $12 here or use the percentage bar here to just toggle it and select the amount of my assets I'm using. If I bring it to the middle here, it's 50% of my asset, which is 12.39, which is the 50% of this total USDT I have in the spot wallet. So when I enter the total amount I'm spending, so I can tap on buy. I'm buying Bitcoin at 21,000 USDT. If I tap on buy, my limit order is created. I have a notification at the top here. It's created. So you can also check your order history, your open orders here. So you have your order displayed here. Fine. Now, my order is not executed because the market price has not reached that limit yet. The market price presently is around 22,900 USDT for one BTC. I set my order price, my limit price at 21,000 BTC. So I'm telling the system that when the market price, when the price of Bitcoin drops below 22,000 to 21,000 USDT, it should buy me BTC at that price. So that's why you're not even seeing my order here. So it's until Bitcoin price gets to that limit price before my order gets executed. So that's just as simple as Bitcoin, as simple as limit order works. So I can also cancel my order. That's limit order, and that's how it works. The next one is market order. As displayed in the slides, this is what you get when you tap on market order. You have the market price already there. You cannot edit the price. So I can either enter the total amount of USDT I want to spend to buy Bitcoin at the current market price. If I want to spend, let's say $20, 20 USDT from my 24 USDT, I can just enter that total amount. If I tap on buy, it will buy Bitcoin immediately. Immediately. However, if I feel I don't want to enter the total amount, I want to use the amount of BTC. I want to use the amount type using the market order. So I can enter, let's say if I want to buy 0.01 BTC, already my total USDT in my wallet cannot buy 0.01 BTC. So if you know the amount of BTC you want to buy, let's say you have 100,000 USDT in your wallet and what you want is 1 BTC, just enter 1 BTC, tap on buy BTC using market order. It buys Bitcoin for you at the current market price. I explained something about the con of using market order. Let's look at the order book here. At the order book here, you can see the amounts. This is the price at which Bitcoin is, at which the orders are placed. You have the ask prices here, and you have the bids prices here. These are the buyers, while these are the sellers. Now, the cheapest seller here, the cheapest sell orders here is 0.0 something BTC. Now, if you're buying, let's say 10 BTC at market price, if you're buying 10 BTC at market price, it means it will buy Bitcoin for you. If you add everything here, from here to this top, it's not even up to 10 BTC. So you could go up deeper into the order book to fulfill your order, which means you could even buy at 23,000 USDT without knowing. So that's some con of using market order. So before using market order, you must actually know what you're doing and make sure the order book is very, very liquid and robust to actually use market order. So you'll be able to buy at the best available price on the market. Now let's check on stop limit. So this is the stop limit order type. For stop limit, you set a stop price, set a limit price, and define input your amount or the total USDT I want to spend to buy BTC. Now, what is the stop price? The stop price acts as a trigger. So it only triggers to place your order on the order book. So what the stop price does is this: Bitcoin is at 22,000 now. I want to buy Bitcoin at, let's say, 19,000 USDT. But I want to set a condition. I don't want to place the order straightforward. So I want to set a condition that when Bitcoin drops to 20,000 USDT, please place an order to buy Bitcoin at 19,000 USDT for me. How do I do that? Then I'll set my stop price at 20,000 USDT for Bitcoin. Then I'll set my limit price at 19,000 USDT. So I've simply said, if Bitcoin price drops to 20,000 USDT, I want to buy Bitcoin at 19,000. Place an order for me. So I said, okay, let me say I'm using the 100% of my assets in my wallet. I'm using the 24.89 USDT I have in my wallet. So when I tap on buy now, you get a notification explaining it to you further. It says, if the last price drops to 20,000 USDT, an order to buy 0.00131 BTC at a price of 19,000 USD will be placed. So my order is not actually placed immediately. I tap on confirm now. My order is not placed. My order is simply waiting for Bitcoin to get to 20,000 USDT before it gets placed on the order book, before I join the queue to buy. So you can see from the open orders here, the date and time at which my order was placed, the pair I'm trading, the type of order which is buy. So the price at which I want to buy BTC is 19,000. But the condition I set is that the trigger condition is when BTC price is less or equals to 20,000 USDT. That is how a stop limit order works. The same way for sell. If I'm selling, let's say I'm selling Bitcoin and I want to sell Bitcoin at, let's say, 30,000 USDT, but I want to place the order when Bitcoin reaches 29,000 USDT. So the stop price will be 29,000 USDT. Then my limit price will be 30,000 USDT because I want to sell my Bitcoin at 30,000 USDT. When the price gets to 29,000, I want it to place another for me to sell Bitcoin at 10,000. So it's as easy as that. Now, the last one I want to show us is the OCO order type. So let me cancel this stop limit order. So the OCO order type. So you tap on the drop down here, access the OCO. So this is what you get when you're using the OCO order. So you have the price, the stop price, the limit price, and the amount. So another way to easily get this is that, see this price, this is your limit price. This is your limit price. The stop is the trigger price at which a stop limit order will be placed. So these two, this stop and limit, are basically working for stop limit order because, as explained, OCO order type combines two types of orders, which are the stop limit order and limit order. So the first thing you do is set your limit price. Let's say, for instance, I want to buy Bitcoin at 20,000 USDT. So my limit price will be 20,000 USDT. So this 20,000 USDT is at the price at which, if Bitcoin gets there, my order will be filled immediately at 20,000 USDT. I will be able to buy Bitcoin at 20,000 USDT. However, the stop price now is saying, let's say Bitcoin is at 22,900, which is trading at 20,900 now. Let's say the resistance, we are assuming the resistance is around 24,000 USDT. So I'm of the opinion that, okay, if Bitcoin gets to 23,000 USDT and breaks the resistance, I would want to take position above that resistance in order to ride it up. So what I will do is set my stop price at, let's say, 23,000, my trigger price at 23,000, then set my stop limit order at, let's say, 24,000. So what I have done is that I've set a limit price. If Bitcoin price drops to 20,000 USDT, my order gets filled immediately to buy Bitcoin at 20,000 USDT. If it doesn't get down, let's say it goes up and breaks resistance at, say, 23,000 USDT, then I'll have an order placed at 24,000 USDT. Then it gets filled when the market price reaches that 24,000 USDT. So if I do that now and say, okay, I'm buying with all my USDT to 100%, or I say, okay, I'm buying with just 15 USDT, you can enter it or just have 100%. Now, so when I click on buy BTC now, buy BTC, I have the OCO buy order created. Now, if you check your open orders, you have two orders. So this is one of the difference between the other order types and OCO. OCO places two orders for you. The first one here is the limit order, which is at 20,000 that I have set that if Bitcoin price comes to 20,000 USDT, it should buy Bitcoin for me, which I'll be buying 0.00062 BTC at 20,000 USDT. Immediately the price gets to 20,000 USDT. However, I have a stop limit order above the current market price, which is at 24,000 stop price, which means if Bitcoin price gets to is higher or equals to 23,000 USDT as the trigger price, it will set a buy order for me at 24,000 USDT. So I want to believe that is very clear and straightforward. So if that is very clear, then all we have to do now is just take questions, and that's all for today. We're still going to go into more details in subsequent classes. So if there are a few questions we can answer now before we go into margin with V, then please I would like to have them. Thank you very much. All right, V, I'm done with my presentation. So if there are some questions, let's have them.
Yeah, I think I've seen a question from Farouk. He says, "What is the difference between limit and stop limit?"
Okay. All right, limit and stop limit, just like I mentioned. What limit order does is just to set a limit price for you at which you want to buy an asset. You want to buy an asset when the market price reaches that limit price. So your order is only going to be filled when the market price reaches your set limit price. But stop limit uses a trigger. A trigger means a stop price at which it's a condition the price of that asset has to meet before your order is placed. Your order is not placed automatically on the order book when you use stop limit order. It is until the market price gets to a stop price which you have set. For instance, you want to buy BNB at $300, or you want to buy it at $200. BNB is currently trading at 260 something dollars, 250 something USDT, but you want to buy it at 200 US dollars. But you don't want to place your order immediately. So what you do, you want to use stop limit order. You can set a trigger price, a stop price at 220 USDT. Then your limit price at 200 USDT, which means when BNB price drops to 220 USDT, it will place your order on the order book to buy BNB at 200 USDT. That's just as simple as it is. So I hope that's clear.
Yeah, I believe that is totally clear for Farouk.
All
So,
right.
Kaz, I must say this is a really in-depth explanation of the other types that we can have. Thank you very much for that. And
Thank you
before
very
we
much.
go on, I would like to remind us that there's a Google form that you can fill to share in the giveaway. So check right in the description. You see that we have the Google form shared over there. So you could actually fill that and kindly expect your rewards in 2 weeks. Okay. I could
No
see
worries.
someone asking that when we receive our reward. So as to whatever time you filled it, expect your rewards in 2 weeks. Okay. And also do note that there are parameters for selection of the winners. So that is it. And also you could sign up to Binance with the link provided over there, and also join our Telegram groups, the Nigerian and the Ghanaian, Telegram groups all provided there. All right, so we are moving on to this, and if you're enjoying the show so far, please do well to rate this show. Give us a good rating, really, really important.
All right.
So
And they
just
can they can
as
still they can still share the link as well with their friends to join in.
yeah, exactly. So let me share my screen as we move into all right, cars. I don't know if my screen is clear. Cars, can you see my screen?
Yes, yes.
All right. So yeah, so on our webinar, with Cars has taken us through, spot trading, the various trading types that we need to know and how to execute them. So right now we are moving on to margin trading on Binance. So I'm going to go into these things and then explain them. Right. So now, what is margin trading? So a main difference between the sports trading and then the margin trading is something that we are going to look at. Okay. So margin trading is basically a method of trading assets using funds provided by a third party. So I'm going to explain that. So when you compare this to the regular trading accounts, The margin accounts allow you access to greater sums of capital. And this is what we call leverage. Okay. So this margin trading allows you to have greater access to capital because you can leverage your position. So these basically, because of this leverage, let's take note that leverage is a double-edged sword. Okay, so this leverage has the ability to amplify your gains as well as amplify your losses. So let's take note of that. When leverage enters anything, we know that it is a double-edged sword. So essentially, this margin trading is going to amplify your trading results so that you can have larger profits on successful trades. Now, if the trade is not successful, it means that you are going to have losses. All right. So you may be wondering, okay, so where are these extra funds coming? So these extra funds are coming from other traders, all right, who may not really, have that kind of risk appetite to do the margin trading, but they can, commit their funds into a margin fund. And this fund, this pool of funds is what supports other traders with extra funds when they leverage on the margin trading. So that's basically what it is. So margin trading is just like spot trading where you can trade various assets, but the only, thing that is introduced here is leverage. So you can leverage, and that is this leverage allows you to have access to extra funds. Now, this extra funds helps you to amplify your gains and as well as your losses. So let's bear that in mind. All right. So basically, how does margin trading work? Now, before I'll move on, I would like to say that it is a high risk trading method. All right. Anytime leverage comes in play, just know that the risk is really, really high. Okay. So it's a high risk trading method. And then anytime you initiate a margin trade, so for example, I'm going to do a demo for us to know, but anytime you initiate a margin trade, now you'll be you'll be required, as a trader, to make a commitment of a percentage of the total order value, right? So there's a total order value you are going to place anytime you initiate a margin trade, but you'll be required to provide a percentage of that total commitment. And that initial investment is known as the margin. Okay, so this margin and what you're going to, put the margin you're going to provide and juxtaposing it to your total, worth of your, margin trade position. Yeah, that's where the concept of leverage comes in. And as I say, I want to repeat that this is riskier than regular trading, and you need to use proper risk management strategies to ensure that you keep your losses on the low in case the trades do not go, in your, in your favor. So and another thing worth noting is that this strategy is not really suitable for beginners. Yes, this is a newbie walkthrough, but it is just important that we give you this information. But just another information is that it's not suitable for beginners because of the leverage. Okay, because of the leverage. So an example is, I have an example here. So for example, if you want to open $100,000 trade at a leverage of 10 is to 1. So that is the leverage. It's telling us when you have 100,000, it means that you need to commit, that is a percentage of that 100,000. And that percentage is what I call the margin initially. So you need to commit 10,000 of your capital, and that is your margin. And this is going to amplify, your trading position by getting borrowed funds to put it at 100,000 in all, right? So that is basically how the margin trading works. Now, moving on, still on how it works, when it comes to the, ratios, the leverage ratios, the normal terminology that is used is we use, times 2, times 5, or times 10, right? So that's what we usually use. So if you hear your leverage is 2 is to 1, that is times 2, 3 is to 1, times 3, and so on. So you hear a trader say that, okay, I went on this trade with times 3, times 4. They are just referring to the leverage that they apply to that particular trade. All right. So margin trading can be used to open two positions. So you can choose to go long and or you can choose to go short. Now, going long means that you're anticipating that the price of the asset is going to increase. And then going short means that you anticipate the price is going to drop. Now, one interesting thing is that when the margin position is opened, you know, what your assets that you committed, it acts as a collateral, all right? It acts as a collateral to the borrowed funds. Now, this is really critical because we have something called a margin call. It gets to a point where, in case the trade goes against you, you'll be required to top up your funds so that you can meet the minimum, margin trading requirements. If you're not able to meet this, minimum, trading requirements, most brokerages are just going to, sell your assets and then liquidate you. All right. So that is one thing that you should take note of, right? So you can have a margin call because anytime there's leverage, your funds become a collateral. And that is one thing that you need to take note of. And if the trade goes against you, the brokerages would just, kind of liquidate your assets and then you have nothing, right? So that is another thing that you should note of. You should take note of. And that's what makes margin trading risky because of the leverage. So I mentioned that margin trading is risky and all that. So when should you trade margin? Okay, because you have the option of using the spot trading, option. But when do you want to, when is it required for you to use the margin trade? Now, the first point, and this is by Kanketi, we have our Binance Academy. Do well to check out, the website, and you're going to learn a lot more from there. So anytime you want to increase your buying power, you can trade margin. So how do I mean? For example, if I want to buy $1,000 worth of BNB and I just have $500, so I can choose to use margin trading to give me that, fund ready to buy my $1,000 worth of BNB, right? So I want to buy $1,000, but I have $500. I can use margin to help me amplify or have enough access to funds in order to trade. Now, another thing is if you want to diversify, okay, so you want to maybe introduce another coin or another token in your portfolio, but you do not have enough funds to do that, you can actually use margin trading. And in instances where the market is going down, you can actually use the margin trading to also hedge against the downturn in the market. Okay, so that is a very smart way of also hedging against any downturns in the market. Now, the final and most important thing is that when you have actually understood the potential losses involved. Okay, so it is really, really important. This is a newbie walkthrough, so I cannot overemphasize the fact that you need to understand the potential of losses because it's not like a spot trade that's probably you buy a coin and you lose in accordance to how the market moves and you understand this. But in this case, your losses or your gains are amplified, right? They're amplified by whatever leverage that you apply. So you should take note of that. And you can learn more from our Binance Academy, and we'll have more sessions to break these concepts down. So I'll quickly do a demo, and we can see from there. Kaz, I want to just confirm if I'm still audible enough and my
Yeah,
screen.
very, very, very well, very well.
All right. So this is my account. I've logged in into my Binance account, and I'm going to use that as a demo. Last week we looked at onboarding, right? Creating an account, verifying KYC, doing all that. So I believe that we have gone past that. We looked at how to get your first crypto. So now probably you have your first crypto, but you want to, utilize margin trading. So the first thing is, so this is our homepage, right? Always ensure that it's Binance.com and avoid any phishing websites. Now you hover over this side, you see that this is your, your profile. Then move to your dashboard. So let's click on the dashboard. Here, you're going to have a general overview, of your account. Okay, customize your profile. I'm not doing that now. All right, so here is your dashboard, and then you'll be able to see all the the general overview of your accounts in your dashboard, right? So we have your deposit, withdrawal, gift card, all that. Now, what is of interest of us is margin. Okay, so you can see funding, margin, futures, and and this. But we are not talking about futures today. Probably we'll look at futures in a subsequent series. So you just click on this, the margin. So once you click on the margin, you will see that you have various options. Now, the purpose of this is to amplify, is to increase the access of funds. Okay, so you want to, increase the funds that you have in order to trade with it or whatever you want to do. So the first thing that you can do is that here sometimes you'll be given, okay, we'll get there where you'll be given a quiz to take and everything. We will get into that, right? So the first thing you will want to do when you are in your, margin account is to go to transfer, right? You will have to transfer your funds in order to, be able to undergo your margin trading. You need to transfer your account. You need to transfer your funds into your margin wallet. Very, very important. So when we come here to transfer, now you can here you know which particular assets that you want to transfer. Okay, so probably let's say I want to buy BNB, right? So I have some BNB in my spot wallet, so I want to transfer that into my margin wallet. So I come to BNB here, and you see that we have many options beside every asset. Sorry, so we have transfer, we have borrow and repay, and we have trade. So I can click on transfer. So you are given the options either to transfer from your fiat and spot to your margin. Okay, so and here you select whichever assets you want to, transfer, right? So let's say I want to transfer BNB. I just have some $26 here. So let me just click the max. So I am going to confirm this. So I'm confirming that I want to actually transfer the BNB I have in my spot wallet into my margin wallet to aid me continue with whatever I want to do in terms of trading and then having access to more funds through leverage. So I confirm it. So once I confirm it, so it means that right now I have BNB here in my margin wallet. So now, since we have BNB here, what can we do now? So I'll have to borrow, right? So the whole aim of the margin trading is that you can borrow more capital or more funds to add up to whatever you have, right? So we can borrow. So I come back here because it's BNB I'm dealing with. If it's any other, crypto or coin, you can exploit. But in this tutorial, we are using BNB. So here we come to borrow. So now, I have, how much do I even have? 0.2. So here you have the luxury to choose how much you want to borrow. Okay, if you want to borrow 25%, or if you want to borrow 50%, you want to borrow 75%, or you want to borrow 100%, right? So it depends on you. So let's say I just want to borrow 50%, right? So I'm going to confirm and borrow this amount of money, right? So this is the entire process. So you're going to confirm and borrow. So let me borrow, confirm borrow. So I have successfully borrowed 50% more in addition to the funds that I have. So right now I have more BNB than I transferred here. That is the beauty of margin trading, the leverage. So I've been able to borrow more, and with this more funds, I can choose what to do with it. So essentially, let me trade with these funds that I have. So first we transferred, next we borrowed. We have enough funds now, and you can see that I borrowed 50%, right? So now still BNB, we can move on to trade. So I can trade any pair that you wish to trade. So let me just say BNB USDT. So I just want to open that. I'm not going to do any live trade for us, but this is the interface. And as I said, you need to start a quiz because this is indeed risky. So you need to start a quiz to, ascertain that you actually have enough information about what you're doing and you can move on. So you have to go through the quiz. I won't go through this quiz now, so not now. So, but do ensure that you go through the quiz. And here, now you can place your trade, okay? So whatever amount of BNB, if we learned the various types here, whatever you want to trade, whatever you want to do, you can actually do all that here, all right? So I wouldn't go much into that. If you want to buy, if you want to sell, whatever you want to do with your funds, now that's your choice, right? And also now after, let's say I have traded and I want to repay, so you can actually also repay. Let me just go back. So you can actually choose to also repay whatever you have borrowed, right? So you can actually repay. So maybe I'm ready to repay, so I come to repay, and then you can also proceed with that, right? So this is confirm borrow, this is borrow. So you move to repay here, and then you can repay. You choose the assets, right? So it's BNB we are dealing with. Choose BNB, and then I can go on and fill whatever amount I want to repay, so that you ensure that you're not liquidated, or you're not out of you're not totally, you don't have any margin call, in accordance with whatever you chose to do with your funds. So that is basically what margin trading is about. This may not be too in depth, but this is basically showing you how you can transfer the funds into your account, how you can borrow, how you can trade, and how you can repay. Maybe in subsequent series, we would look at other things that we can explore these things into details. And one important thing is that before you can make any decision, you should know what you are doing in the market. Okay, so if it is BNB, I didn't do much at trade because it's this decision lies on you. You need to actually do some technical analysis, which we'll go into later, to know what you want to do. You don't just go buying and selling anything anyhow, but you should understand how the market is moving. When Carl was speaking, he spoke about resistance and all that. All these things are things that we are going to explore under technical analysis. These are going to well inform you to take whichever decision that you want to take in the market. So, as a newbie, as a beginner, if you don't want to play the game of leverage, or you don't want to borrow and all that, you can just stick to the sport as you learn more and more on how to amplify your gains with margin trading. So, this is basically the little demo I wanted to do. Um, I think I've come to the end, Kaz.
Oh,
I don't know.
beautiful, 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 beautiful. Awesome. So it's so much information embedded in there. And let me just, we have few minutes left. So let's just take a few questions. So there is this question that has to do with what you just mentioned, or what you just lectured us on, which is there any fee for using leverage money, difference from future trading? Is there any fee for using margin? I think that's what the person really means. For using margin trading, now, is there any fee attached?
Yeah, yes. There are some fees attached to that. So, in fact, I didn't mention this, that anytime after you borrow your funds, okay, let me just try. Now, after you borrow your funds, you are going to pay some interest. Okay, so you actually have your borrowed funds plus interest reflecting in there. So you can actually be checking on the interest level as time goes on. So there are actually fees attached to that also, right? So
All
that's
right,
it.
yeah. In addition to that, for anyone looking to get the different interest fees on each asset, every asset has their daily interest and their yearly. You can get that from binance.com/en/margin dash fee. You can see all the available assets, and your fee, your interest, the interest you're going to pay on an asset actually has to do with your user level. So VIP levels, regular user have different interest rates. So you can check the different asset there to get their interest level for before you borrow, so you can know what you probably be expecting to pay back hourly. There is the hourly rate, the daily rate, and yearly rates, depending on how long you want to use an asset. So another question here says, is there any difference between Binance loan and Binance leverage money? So, which is in my, I believe, is person is just trying to know, is there any difference between Binance loan and Binance margin? Do you have
Yes,
any comment
yes,
on that?
yes. No, you can actually borrow. That is a different, that's a different
Very
product
different.
for Binance. That's a different product.
Binance,
This
yeah.
is actually margin, trading. So yes, you have leverage to increase your capital, but we also have the loans where you can use whatever asset you have as a collateral to receive,
Collateral, yeah.
whatever assets you. So probably, let's say you have BNB and you don't want to sell your BNB, right? But you've spotted a very juicy opportunity in the market. You can go put your BNB as a collateral and get a USDT loan. And this is, in percentage of whatever you present. So actually, we are not here for that, but probably we'll look into that product too. So you can actually get a loan and also come and pay back as usual. So there are also, risk factors in accordance to that, and you need to check those levels very well. So if you take a loan and you are not able to repay on time, or the assets dips more than necessary, it means that you also face a risk in there. So when we have
Yeah,
time, we are going to go in depth into that loan feature on
yeah.
Binance. Cars, I
Yeah,
don't know
yeah.
if you would
No,
add
no,
something.
that answers the question. Just to chip in something that loan, just like a V mentioned, is a different product entirely, which probably we're going to look at in subsequent class. But one thing that is very important is that in loan, when you get a loan, which is you can get up to like 65% of your collateral, you can withdraw it even outside Binance platform. That means you can withdraw the loan outside. But we'll get to that later. But I'm seeing some questions that were like two or three people asking the same question, which is relating to leverage. So I want to believe they are kind of they are confused between margin and leverage. I don't know why that confusion is happening. So they are asking what's the difference between leverage tokens and using margin. Do you have any
Okay,
comments on that?
so yeah, so okay, using margin is just as I explained. I just
Yeah.
hope that concept
Just increase
is
trading power.
yeah. So now I want to go to the leverage tokens. When you go to the sports wallet, these tokens already have um, leverage attached to them, but they are traded in the spot marketplace. Okay, so if you buy, let's say, BNB up or BNB down,
Yeah,
there is already leverage attached to it.
yeah, yeah.
So whatever, when you buy a BNB app, it means that when BNB is going up, there is a percentage attached to that particular, token that you have bought, and you are going to have the profit in accordance to that. Probably we'll go into that later. But
Very
those assets, those leverage tokens are totally different from margin trading. Okay,
margin
but
trading.
these leverage tokens are usually you can buy them on your normal spot marketplace, and usually people use that also as a hedge in the market, right? So
Yes,
that
yes.
is there's a huge difference between the two, and probably we'll go into that later. I don't know if Cars, you have something to add to
Definitely,
that.
definitely, awesome, awesome. So just like you mentioned, leverage trading is like when you see all these tokens either up or BNB or BNP down, leverage is already attached. So if you're buying BNB down, it means you are kind of betting that BNB is going to be going down, but you see the price of BNB down going up while BNB actual price goes down. So, but we'll explain better in subsequent classes. Now we have practically come to an end, and just like we mentioned from the beginning of this session, that anything we say here is not financial advice. Please take them as educational materials, and you can always come back to these videos to replay them to catch up on whatever you missed or you want to understand better on what we have said in this session. And please share with your friends. It happens every Thursday at 7 p.m. West African time, 6 p.m. GMT. Always feel free to join us, ask your questions. If you ask a question and it's not being answered, please join the communities. You can join the Binance Nigerian community at Binance Nigeria on Telegram, or the Binance Ghana, which is at Binance G8 Binance. If I think I got that right, right. So
Yeah,
also the links are also there. Please fill the giveaway form as well, the Google form for the giveaway, to get a chance to win from the prize pool. And please note the giveaway value, the giveaway price doesn't come in until at least 1 week or 2 weeks time. So please, it's not like when you feel today you expect for the winnings in your wallet tomorrow. So please be patient with us, and please always join us every Thursday. My name is Kazim Seidu, and V.
yeah.
Just some sign out words, please.
Yeah, so I just hope that we had a great time on today's
Oh,
um, you
definitely.
know walkthrough. And just as Carl said, you can come back and play it and do share it with your friends, because in this you're going to have a series of very informative class, just as we had today. Go into details. I know a lot of people are excited about trading because you claim like that's where the money is, right? So you want to
Yes.
know about technical analysis, all forms of analysis, futures trading, so many other Binance products and features. We are going to go into that. So
Yeah.
yeah, do well to share this, and then join our communities. If you have questions, you can reach out to
Great.
support, even and also visit our website. Binance Academy has a lot of, right from beginner to intermediate to advanced, whatever you want to learn, you could find that there. So my name is V. You can find me on Twitter at FinOtto. And Kaz?
Oh, yes, my Twitter handle is @seiduk_official. But someone here is asking for TG handles, probably to reach out in your community. V is from the Ghana community. V, you want to drop your Telegram and do on Binance Ghana?
Okay, I'll do that. So I'll just do that in the community so that you can.
All right. So please, the community links are there. At the top, you can scroll up to see the community links. Binance Nigeria is Binance at Binance Nigeria, while Binance Ghana is at Binance. The Binance is small letters, lowercase. GH is also lowercase. So Binance G8, then Binance. capital B Binance. So that's it for Ghana, Binance Ghana. Please join the community to ask more questions to keep up with what is going on in Binance ecosystem. Thank you very much, and I'll see you next week.
All right. Thank you. Bye, everyone.
Bye.